Hey, welcome to this panel discussion titled Countering Deception, Addressing Deceptive Designs in the Inclusive Finance Sector. Before I start, I do want to run a quick poll with our audience. And so I will request that we share a screen. The screen has a bit of a deceptive design for you to look at, and then there's a little poll for you to answer. So just by way of background, this is from a website that allows you to compare insurance policies before you purchase it. And the deceptive design here is not the default tick on the mail. That's a normative problem, which we need to separately address. But there is a deceptive design here, which is that, you fill in various information, asks you what the age of the person being covered is, and then you reach this screen, which you see on the right. So as a quick poll question, is that the next screen? Or yeah, so how many of you have encountered a screen like this where you're forced to provide personal information such as your email or phone number before you can access any part of a product or service digitally? And your options are, I see this frequently, not that frequent, rarely, or never. I think what we're saying is, okay, 95% say that I see this frequently, and 5% say, I see this, but not that frequently. So that's what we've just seen is an example of, I think we can stop sharing the screen. What we've just seen is an example of a deceptive design. And, what is a deceptive design? So it's a term that first came into being in the early 2000 or 2010, I think, when Harry Brignall came up with the term dark patterns, which is not to say that, it didn't exist as a concept. I think we just named it at that point. It's basically, a user interface that's been created so that users do things which are not in their interest. And in case you're wondering why we're speaking about user interfaces at Financial Inclusion Week, where, we should be talking about financial services, it's because UX and UI have become such an integral part of delivering anything digitally, including financial services, that we cannot think about consumer protection without thinking of the harms that they can cause. And Harry Brignall, who coined the term, recently released a book, and I think we should be able to share that in the chat. But he points out the extent of digitalization that we've seen in the world, and says that when we think of design, we have to stop thinking about graphic design, because design today is about persuading and influencing people to do things. And the question for us here is, how do we prevent them from causing harm? And what can regulators and policymakers do, and what channels of recourse can then be made available for consumers? Because if we think about consumer protection principles as actions, deceptive designs reduce transparency. They definitely, they violate the do no harm because they are doing harm inherently. They're unfair, and they're often driven by aggressive sales incentives and don't respect the privacy of consumers. So there are lots of boxes there that we can check where they're going against the basic tenets of consumer protection. But more importantly, the problem that we face is that UI and design are hard to regulate. So today we don't have any mechanisms for complaint regulation, and we don't know who should regulate deceptive design. So with that, I'd like to extend a really warm welcome to all our panelists, Monami, Ridwan, Tatiksha, and Shelley, all of whom are part of this really small but growing multidisciplinary community of people that are beginning to recognize the challenges that deceptive designs pose. So Monami and Ridwan, I know you've both done research in 3 really important markets that have seen a high uptake and usage of digital financial services in the past decade, which is India, Kenya, and Nigeria. So I'm going to start with you both. And Monami, perhaps you can jump in first, and because you've done this mystery shopping exercise, and Ridwan, then you can follow up with, what you see with the policy and regulatory landscape and the gaps there. But tell us a little bit about findings from your respective studies and what you've discovered.
Sure. Thank you so much, Jayashree, for inviting me to this panel to discuss, as you said, a very important topic. And I'm really honored to be among these esteemed speakers. Before I jump into the research findings, I want to take a step back and just talk a little bit about the extent of digital transaction uptake in India. So if we compare the numbers with 2017 and then jump to 2021-22, In 2020, 2017 and 2018, there were 2,071 crore total number of digital transactions in India, which has increased to 8,840 crore in 2021, which is almost a 327% increase in 5 years. And if you look at the total value of digital transaction, that's grown by 54%. Of course, we know this has been driven by multiple, kinds of innovations like India Stack. There's also funding, there is innovative technology, there's increase in smartphone, uptake and internet users, as well as a very strong and positive push from the government and regulator to kind of, proceed with this kind of innovation. But what this also says that these numbers could be used almost like a proxy for the scale of deceptive designs that might exist in the market. As we saw on the poll, 95% people have actually seen something like this. And in the parlance of deceptive design, that is probably something called a forced action or a forced disclosure, right? So what we did at our research at D91 Labs, which is also supported by the Pranava Institute itself, is we audited 9 such very popular fintech apps in India across different types of financial products. So they were lending products, investment products, neobanking products, as well as insurance products. And what we wanted to understand is we wanted to understand through the entire flow or the user journey of each of these apps, where are we finding deceptive designs? What is the kind of deceptive design that we have identified? And at the end of all of this identification and audit, what is the kind of harm it's really creating for the end user? May that be a tech-savvy user or a new to tech or a new to fintech user, right? So when we did that, we saw that these patterns can be observed in the form of multiple kinds of deceptive designs. So for instance, there was things like pre-selected checkboxes. It's very naive if you think of it from so what is the problem with the pre-selected? Problem is that a person is dissuaded to kind of go and read and select on their own volition, even the entire box is pre-selected or the checkbox is pre-selected. There are also other designs like forced registration, forced disclosure, and one design that we're all very frustrated with is the whole immortal account design, where you can't really get out of what happens. So we identified multiple such designs, but to kind of zoom in, there were 5 such designs that we saw across multiple apps that we audited. There was one that was forced action, where apps basically request access to excess information such as scraping of, through scraping of SMS data and social media without explicitly really mentioning the purpose for which they are taking the data. There's forced disclosure, where the user is asked to share more than necessary personal information, even when it's not relevant to the product. So for example, if we imagine someone's asking us for a credit bureau report when the product itself is not a lending product. Then there was hidden information, where the terms and conditions were only the ones that were business friendly were highlighted. Everything else was kind of folded in the longer list of TNC, which nobody will ever go and read. Pre-selection is something I've already spoken about, and there was also immortal account, which is impossible to kind of erase your account unless you send them an email and they take a decision on your behalf, or it just goes on forever, right? So that's what we found. We also mapped all of these patterns to specific harms that they could cause. And one of the harms that we found most prevalent among, we identified 5 such harms, but one such harm we found most prevalent was a privacy harm. So a privacy harm is basically, the harm that is caused through different deceptive designs like pre-selection, privacy is occurring, interface interference, obstruction, and confirm shaming, and many more. As we will speak more through the entire webinar, there's also indirect and stronger impact on the low-income household more than the tech-savvy kind of a population, right? I'll stop here, but this is really the gist of our entire research, and more can be found on our blog around the same topic.
Thanks, Monami. And I think in the chat, we will be sharing the link to D91's work. So you can click on that link and read it at your convenience. But Ridwan, just turning to you, because you've done similar research in Kenya and Nigeria, which are, 2 other large markets where there's deceptive designs are as prevalent as digitalization. So tell me about your findings.
Thank you. Building on what has been said earlier, for us, it was interesting because 2019, we did like a smaller research trying to understand the extent of, deceptive design across the continent. And what we found was both products that are being built on the continent and those that are built outside the continent, targeting the continent, had different manifestations of deceptive design. And then when we looked at, we decided to then take a more specific focus on the Nigerian and the Kenyan markets. And what we did was to basically look across, e-commerce, electronic transactions, and also flight aggregators. And what we found an interesting amount of deceptive designs that are actually being deployed. If you look at so many e-commerce sites, for example, you'd find yourself dealing with countdown timers, different pop-ups that are also close to social, to compare or not during the social context, telling you there are just few items of this particular thing that is left, and then there's that urgency to want to buy before thinking there's some imaginary people who are actually buying out all of that. We saw false pricing schemes, which we've also been able to sort of kind of link to, also the bigger role for things like personalized pricing algorithms, forceful creation of accounts where you just find yourself in that rabbit hole and you literally have no choice, there are really no options for you. There's really even no way to exercise, rights that should apply to you. And then when it came to flight aggregators, we found pretty much the same thing to nudging. There are just one seat left on this particular flight. You go to another booking site and it's a different story for the same flight, same day, same timing. And then you're wondering what's really happening. And another interesting thing that we also found, especially from the transactional point of view, is we saw a lot of hidden charges. And we did a further research into the digital lending ecosystem. And this was also something that was also prevalent. Hidden charges, which makes it very difficult to be able to compute, even things like how much people repay. And then all these things help, at the end of the day, sort of keep people in the debt trap. And it's an unending debt trap because beyond now people are in debt traps, they can pay, and now we have social disgrace hanging over them, calling family members, whipping up crimes against people that they never put part of just because they are owing, clear case of falsehood. It's as bad as people can be accused of having, really terrible diseases that can exclude them, or being accused of committing crimes like robbery, for example, that's they stole and something like that. Basically, just to create some sort of a social exclusion for them. And also another big challenge, which, as we mentioned earlier, was around it was whole horrible world of transparency. The terms of use were not genuinely reflective of what the products were doing. The privacy notices were not genuinely reflective of what was also happening. And then there was also like that bit of social proof where, trying to exert a bit of element of pressure on people. And this is essentially looking at, are you going to buy or you're not going to buy? Are you going to use this or you're not going to use this? If you don't use this, then maybe, you're just a horrible person. I mean, it could be the language, the framing sometimes could play into cheap egos and, people end up doing what they really don't want to do. And then there's a whole chaos around how consents have been obtained, how consent is being managed. The whole using element of scarcity. And then these are like some of the key things that we identified. And I guess as this conversation progresses, we also begin to talk about, some of the key effects that we also found, how these things really impact people. Because again, really the gates that keep people in this element is always start from the design. I mean, there's the urge to want to get things, and then the design then keeps them in a loop. And then it's an endless cycle of things people don't understand they were signing up for when they were just trying to shop or trying to get a loan or just trying to use a service essentially.
Yeah, and what you just described actually makes me quite fearful about what we might see with embedded financial services when you bundle financial services with non-financial services. How much worse is this going to get? But we'll come back to that. I do want the audience to experience this deceptive design a little bit. So we have a screen that we're going to share. There are 5 deceptive designs. This is from a popular e-commerce portal. So it's a live screenshot that we took a couple of days back. There is the first deceptive design is the default option. And, that's something that both Monami and Ridwan refer to, which is, by default, it's on subscribe and save on the screen, as you can see. But there are 4 other deceptive designs. So if you can spot it and type it into the chat in the next 1 minute, and we'll obviously tell you what some of these are. This is just to say how ubiquitous this is, that we experience it, but we may not even, of course, once you start keeping an eye out, you'll see it everywhere. But it's almost, you see it in every screen that you encounter. So any responses to that? I can give you a hint. So there's it uses actually let's just stop sharing. So there are the 4 others are, there's something called anchoring, which is, there's it'll tell you that each soft gel capsule is very cheap compared to the overall price. Yeah, somebody's just said 2 months is the default, which, it says that that's social proof. But, if you look closely at the bottle, the math doesn't add up, because you'll take 1 pill a day. So that's 60 pills in 2 months, but each bottle has 180 pills. So it forces you to spend more. The get it by Tuesday, June 4th is a big problem. Because it makes you feel like it's almost yours. And then if you notice the screen, it focuses your attention on the subscription settings. So, it almost tells you, most people are likely to start setting up their subscription as a result of the screen. So there's a lot that's going on there when designers think of psychology and, how consumers need to be converted. And so with that, I'd like to turn to Titiksha, because, you've been working with a set of, multi-stakeholder groups, really, and you take an intersectional approach to the impact of deceptive designs. And you're thinking about the impact that they can have, not just on consumer privacy and human rights, but also on competition. So tell us about the taxonomy of harms that you've set up and the impact that you've seen in the Global South.
Absolutely. And once again, thank you so much, Jayashree, for having me here. It's great to be a part of this panel and talk about this as a part of the Financial Inclusion Week. So very quickly, to answer the first question, we started working on deceptive design roughly 18 months ago. In order to, very simply, we started at a point where many legal scholars across the world have. They wanted to understand what is the point where persuasion or a nudge, which exists pretty much everywhere, right? Like even in the offline world, we see these nudges all the time, bombarding us constantly. At what point in the digital world does it nudge become a dark pattern, right? And now this is extremely important, because increasingly, till a few years ago, deceptive design was actually seen as a soft issue, which was not worth real attention, like privacy, or regulators who are looking at the larger problems in the digital economy and so on. But our research, of course, following from the research of a lot of other people who are experts across the fields of HCI and of course, privacy and data protection and several others, have talked about how there are not just consumer harms, which have to be dealt with and taken up seriously, but also substantive and structural harms. So several times when we talk about dark patterns, it becomes a very personal conversation. It's like, I got tricked, or I lost money, or I lost data. But what happens when we actually think about this loss of data, or loss of privacy, or loss of money and that as an aggregate problem for the digital economy to be dealt with, right? And that's where I think the more substantive policy conversation also begins. So our research on deceptive design, essentially how we went about this is we realized, one, we cannot speak only to one group and essentially understand how the issue is. So we identified 5 stakeholder groups, which included academics from various fields, again, because it's an extremely interdisciplinary issue. Second, we spoke to industry, people within the industry, that is people who are making these decisions day in and day out, who are defining the metrics through which success on platforms or user retention on platforms is, for example, calculated and understood. Third, we spoke to designers who are in the day-to-day business of designing screens, right? How much do they think about this? Is this something that they've gone through during their design curriculum or their design university courses, right? Third, we definitely spoke to civil society people who have been thinking and talking about this as a public issue, which impacts lots of communities on the ground. And finally, to people who work in the policy space, right, who are thinking about this from a regulatory standpoint. And we realized bringing all of these people together, of course, is challenging because oftentimes they don't speak the same language or may share the same ways of seeing the particular issue. But I think that's precisely where the importance of having such a dialogue becomes crucial when we talk about deception. So some of the key learnings from this process, and I'll talk a bit about the harms and before I move on to the positive side of ethical design, is we realized that there is a theory practice gap here which needs to be bridged. So there's a whole bunch of researchers and academics who have been talking and thinking about deceptive design for a while now. That side is not new. But when we talk about practitioners are not at all exposed to a lot of this research. And perhaps we need more. And I think, for example, the panel that you've put up today and conversations in such fora where more and more people are talking and becoming aware of this issue become increasingly important. So deceptive design today, like my co-panelists have already mentioned, exists not just in one geography or in one media. It is pretty much ubiquitous everywhere on the web, regardless of what sort of digital interaction you are a part of. Second, I think now increasingly it's beyond the screen. So it's not just about the physical screen through which this deception comes across, but also through new interfaces such as voice, such as AR, VR. And with the introduction of AI, we need to be really careful about how this is going to pan out when we have auto-design website tools, which give you a website homepage in 6 seconds. What kind of deceptive data is that already fed? And is it going to create new forms of deception, which are absolutely outside the taxonomy, which legal scholars have so far created? So I think the conversation also from a more policy standpoint needs to move away from taxonomies, not just away in the sense, add on to the conversation, which is so focused on taxonomizing and categorizing these dark patterns, which serves a purpose, but is still limited because it's like that game where you pop one bob and the other one pops up. That's how we are seeing dark patterns evolve day to day. In fact, within the community, Monami and I also, for instance, we keep sharing new dark patterns which we come across, really. And so I think instead of just thinking about taxonomy a lot, we also need to now seriously think about a harms first approach to looking at this, right? And I think a lot of jurisdictions are doing that. The European Commission, the FTC in the United States has definitely taken notice of this. A whole bunch of consumer protection councils and agencies across the world are also putting out papers and consultations, pushing their governments to effectively strengthen consumer protection laws so that consumers at the end of the day have some redressal mechanism when they are harmed by these patterns, right? But coming back a little bit to the global South context specifically, I think, and I think Monami mentioned this already, is the issue with the global South countries is one because of the rapid pace of both digitalization and digitization as two processes that they undergo. See that there are a whole bunch of first-time users who now are accessing not just they're not accessing just the fancy services on the web. They're accessing very important public services on the web, right? So the internet is their way of actually getting citizen-centered services. That's how the governance, and especially after the post-COVID shift, this is a huge transition that we've seen in the Asia Pacific region. The numbers of how much internet has pervaded government service are extremely high. And so we see, when we look at users, the vulnerability, of course, is far more than one might imagine and think about. In India, for example, one of the interesting cases which happened a few years ago was of fake loan apps. And now fake loan apps we don't know really what they are. Maybe people in the fintech sector will be like, this is not a problem because these are not fintech apps. These are illegal apps. Or you look at cryptocurrency, which sits in a very comfortable gray zone. It's not legal. It's not illegal at the same time. And we saw a whole bunch of companies take advantage of that lack of legal position by the government, which is, of course, trying to grapple with this new technology, through which is, of course, because there are no guidelines that they essentially follow, they use a whole bunch of deceptive patterns to make people think that these are safe investments to make. And these people are not sitting in metropolitan cities. Several of them are in tier 2 towns or in villages. It's their first time coming online and becoming a part of the financial ecosystem. So sometimes what I also think in a fora like this, where we're talking about financial inclusion, there is a strong link that we must establish between this deception and what we think is a trusted and safe way to access financial services online. And that happens in 2 ways. One is when we see that these harms, especially in India, there's a huge documentation around loss of financial loss of money, right, as a very serious sort of harm. So if you are a low income household and you're still at the household single person income sort of level, then when you lose money on app, which is a fake loan app, or it's something which is posing to be a safe investment app, it's quite a serious thing which must demand regulatory attention, right? So it creates, of course, vulnerabilities across special groups as well as specific regions across the world. Also because for a long time, studies on deceptive design tended to be extremely focused in the European Union or the northern countries, right? So the new kinds of intersections that we are seeing with deceptive design have to do with language. So for example, a lot of people in the global south countries do not speak English. And companies do know that. So you'll have a whole interface of the app, which is essentially in that regional or local language. But when it comes to legal notices or terms and conditions, those are in English, which make the vulnerability or the possibility of deception much higher than, let's say, if you translated some of those also in regional languages and made it available, right? Voice or new interfaces like I talked about. I think given how ubiquitous deception is, and it's hard for us to cherry pick, right? Where do we even start with these whole range of issues? What we also learned was through the consultations that we held and the work that we did was one, we need to look at vulnerable use cases, right? We need to look at specifically those groups of people who are likely to be more affected than others if we are to start, looking at this as a serious problem. And number two, while we are designing and thinking about products, why not keep high-risk use cases in mind? Why not think about a high-risk use case, which will, as a part of your user persona, because that will anyway work for a normal user. So your normal user essentially loses nothing if that decision making is already a part of the product development process, right? I'll pause here because I think I've covered quite a lot of ground, but yes, I hope that's helpful.
No, that's super helpful. And I really like the focus on, the most vulnerable, because, then automatically the system becomes safer for everybody. But it does raise, and even in the chat, I see that there are some comments on things that can easily be classified as deceptive marketing versus deceptive design and the harms that they can cause, particularly in the financial sector. So, and I think that's it speaks to some of the challenges that we see with the regulatory landscape, because, what are the kinds of laws that we need? What are the kinds of regulations we need? And who really is going to take responsibility for drafting the right kind of regulation to give it teeth, so that it's not it's not reduced to something that an industry body would use to lobby as a marketing campaign. So Shelley, I want to turn to you, because as part of your role, you provide the tools for regulators and policymakers to think about wicked problems. And this is a wicked problem, because as Titiksha described it, it's whack-a-mole, and it's hard to regulate when you just create a taxonomy. What kind of data should we be thinking about as a sector? What's the kind of research that we need to generate so that regulators are alerted to this and then can, take appropriate action?
Yeah, thanks, Jayshree. I mean, you're absolutely right. Crafting legislation is a major challenge. We've heard today that persuasion and deception are very difficult to distinguish, and the shifting tech trends present and ever-moving target for regulators. And it's also a balancing act. I think, we've seen this month that tech companies are actually opposing what they call heavy-handed regulation. I think there's a case in India currently where they're highlighting kind of overlapping regulation and saying that it will cause confusion. They won't know how to comply or who they're supposed to comply with. And also that it will stifle innovation. There is that balance of not completely, taking out the really innovative and great ways for consumers, as we've said, to access these products. So there's a real balance. We've also heard that it's not just a financial sector issue, but cuts across many sectors. And you mentioned these days those lines are so blurred between e-commerce and e-finance, so it's so tricky. Like you don't know you're getting e-finance half the time. You think you're just buying something, and suddenly you've signed up to a buy now pay later or whatever it might be, and you kind of ended up in this contract with someone without actually really understanding what you're doing. And we've heard from the other panelists about the harm, and particularly to the vulnerable. So, regulators really do need to clamp down on this. This isn't going away, and in fact, it's only getting worse. We've mentioned a couple of, good approaches where regulators are creating those policies that they close some of the gaps on deceptive design. I think the key here is the ones that are doing it well are working very collaboratively across the regulatory landscape. So you've got different regulators in countries working together. I think, we've seen the approach from the EU where the regulations sit across a number of directives, such as the Digital Services Act and the General Data Protection Regulation, where one bit covers kind of one base and specificity on one area, and the other part kind of covers the other laws, but they're not repeating or encroaching, so you don't get this kind of crossover and confusion. And the same in the UK. I'm a really big fan of the Consumer Duty Act that they've recently brought in, because they are requiring people to act in good faith and avoid foreseeable harm, for example. And then if you couple that with the GDPR, where it's privacy by design, fair use of data laws, etc., you kind of close in some of those holes that people were getting through. And what you don't have to do necessarily is to have this taxonomy. And, we've mentioned before, taxonomy is difficult when something keeps changing. You can't keep up with it. So broader regulations that cover these are a good thing, as long as you get the balance right. And I think, that's key to keep in mind. And I think there are areas, as you said, there's data and ways to do it, and I'll cover that off in a minute, but I think there's really hard bits to pinpoint when you're looking at specific harm. For example, the psychological harms and loss of freedom by users of online services. That's really hard to capture. It's not something that you'll necessarily see in front of you and instantly recognize it. It's not easily recognizable by regulators. And regulators are having to consider kind of behavioral science techniques and, how are bad actors using pervasive strategies to distract, delay, influence consumers. All these things are happening. And in regulators such as the FCA, you know, behavioural science has underpinned its strategy in protecting consumers. But in LMICs, you know, where they don't have access to, you know, the funding of roles and, you know, big behavioural research departments, there's going to have to be, you know, sharing of information between regulators in how to do this. I think, you know, we've touched on it, but sharing examples throughout the globe and helping everyone understand where the harms are, these subtle and hard to detect harms particularly. So in terms of innovation and data, I think we're really at an early stage. We've got that age-old problem of the adversary being able to utilise new technology to harm and profit from, and those who are tasked with protection kind of trying to keep up with the technology that's being deployed. But I think, and this has been mentioned, there's some really good tools being developed, and they're mostly at the moment sitting within the kind of academic and research space. I think it's such a new, we say it's such a new topic, it's not, but it's early infancy of people understanding it and actually working towards doing something. That's really where we're seeing some really good work. You know, in the academic and research space, we've got people working on tools that utilize advances in AI and machine learning. Getting these into the hands of regulators is key. Giving them the tools to detect harm and take action quickly is key. But I think we are seeing positives, and we're seeing more regulators turn into supervisory tools such as web scraping and text analysis. And these can be really, really useful tools to catch very overt dark patterns and kind of large scale tactics. But they're probably less useful for these more kind of behavioural based techniques. As I said, they're far harder to kind of to spot. And also you've got the extra challenge of, even when you can spot these, quite often, even if they're framed in kind of statistical analysis, you then need someone to go through and check the moral and legal aspects, and, you know, that very fine line between, is it harm or is it just sales technique or marketing? So it's not an easy one for technology to solve. Complaints data is a huge source of information for regulators. Understanding firsthand the harms that consumers are facing is key to tackling poor behaviour. But I will say, consumer complaints, where it's an area where there's a huge amount of improvement needed. So first, to encourage and support consumers in reporting harm. And we know that some people don't even know they've been harmed because these things are so overt. So, you know, how do we get people to report something that they don't even know is happening to them? And secondly, how regulators are able to utilise that data that they've collected and identify the harm being caused. So I think that's a real challenge. And I think it's something that, it's a global challenge. It's something that we all need to be working on. How do we get more information from the harm that's being caused? How do we then apply that to understand how we can spot and remove harm for consumers? I think finally, I'd say collaboration and information sharing is absolutely critical to this problem. Mm-hmm. The range of policy and rules that sit across a number of regulators, the sharing of data and knowledge, it becomes a necessity. You know, we can't have people working in silos on this. And there's always challenges, I know, in sharing information and data, but I think regulators are improving and becoming more proactive in putting in place like legal cooperation agreements. You know, we've seen in the anti-money laundering area, new technologies such as privacy enhancing technology that allows people to share more data between them. And I think that kind of global cooperation for detecting these dark patterns is going to be a multifaceted effort. It needs to involve regulatory bodies, tech companies, academia, NGOs, and the end users. And you know, we've heard from the Pranava Institute, that's, you know, that that's what they've found. You've got to bring people to the table. And I think with collective action, it's going to be possible to curb the prevalence of these deceptive practices. I still think it will be a case of whack-a-mole. I think, like most things, it will never completely go away. But I think, if people work together, we can promote a far more ethical digital environment. I think just finally, my last point, how do we help them? How can we do something? And I think hearing about these practices, the grassroots and research organisations that are doing this good work on the ground play a huge part in highlighting the harm, like educating regulators, educating end users. And as you know, I'm also a big advocate for collaboration tools such as tech sprints or regulatory hackathons, bringing people together to global cross-border problems such as these, where you can shine a light on the issue, bring collaborative approaches to explore innovative solutions and build ecosystems and communities to tackle this together.
Thanks, Shirley. I do want to come back to you and the other panelists on something that you spoke about, which is, the resource constraints that LMICs face and regulators there face. And it touches or refers to something that Ajay spoke about in the previous session, which is that, you're likely to see a pushback from these countries because if you regulate too early, too quickly, you're going to kill the innovation. So, is there a role for private sector in those countries? So let's come back to that. But I think there's also a demand right now or from the audience on examples of how deceptive design takes place in fintechs and, the harms that can cause. And I know that our panelists have examples of that in from your research in the Global South. So perhaps Monami, Ridwan, and Tatiksha, you want to provide some concrete examples of.
Sure. So I will go back to the whole taxonomy of deceptive patterns that is now popular from the work of Harry Rignalls as well as OECD paper and our work. So, for example, if if you remember, we've always seen screens where there is a timer or there is a limited time message which says that if you're interested in this product, this offer is only valid for the next 5 minutes, 20 minutes, whatever. What it's really doing, it's creating a fake urgency. So it's making you think that you really want this because there's a timer involved in it. And the sooner you act upon it, the faster you are going to get that offer. And this offer is really for you only, right? So for example, in investment apps, some of the ones that we audited, they created arbitrary limited time exclusive offerings to expedite the user's call to action. This ultimately leads to harms like psychological detriment and time loss, as well as can also lead to financial harm if you're not reading through the whole thing, right? So that's one kind of deceptive pattern that, as an example, I can state. The other deceptive pattern that I would like to share is sneak into the basket. So you are, throughout the flow of any fintech app, you are, choosing to go for one particular product and you take a decision, you look at all the, price points, the, characteristics of the products, etc. Exactly at the end, at the payment page, the user is not really adding up the total cost. What has happened is somewhere on that page, the fintech company or the product, they have ended up adding 2 to 3 things, which could be over and above fees and charges. They might have also bundled an unnecessary and unsuitable product, but by then you've already got invested into the original product. So imagine an insurance product along with a credit product, which may not be an insurance for the credit product. It could be a random health insurance product, which may be absolutely unsuitable for you, right? And this typically offers at the checkout point where it's too late to change your decision. This creates, again, similar psychological and psychological detriment, time loss, financial harm, as well as also creates like a loss of trust into the market. And over and over, if you keep doing this to the user will identify that I had signed up for something which was 500 rupees, but every time I check out, it's 750 rupees. And eventually it will erode the trust. And maybe one more. Probably I can share, there are multiple other examples, but one more that I would like to share is something like confirm shaming, So confirm shaming is basically a term that is used which emotionally manipulates framing to make the user select a particular option. So it says that a large number of people have opted for this. So maybe this is the option that you want to go for. Even so, it kind of decides for you, even though you are not really thinking through that decision. And this typically happens, in India, we've seen on certain food delivery apps where it says that this is the tip that's used by most number of people. It may not be the one that you want to choose. You might want to give a higher or a lower amount, but it kind of tells you that if you don't do this, you're not conforming to what the whole set of crowd is really going for. So there are many such examples, and at the cost of repeating myself, all our examples are really related to fintech markets, fintech companies in India, specifically in India. Actually, I'll just go for one more, which is something we've really seen very often in lending products. It's called friend spam, or also alternatively called address book leeching, where it in the terms and conditions, somewhere in the pre-selected boxes, they have manipulated the user to give them access to their contact and social network. The most dangerous part of this is, imagine it's a lending app that is asking for phone numbers of your immediate network, and it could be your family, your friends, etc. And they ask it with a naive approach of we might use it to follow up in case there is any problem. But what they're really doing is using it at their choice to follow up in case there's a slight like a slight delay in repayment, and humiliate the person in front of their friends, their families, and whoever number they have access to. The user may not even know that they had given access to this. Of course, fake loan apps have gone 100 steps ahead and morphed those photos that they've got access to through their galleries and images and all of that. But it starts somewhere at this point, and there is no end to it. And for lending products, we know it's usually taken by users when they are in dire need of money, or it's extremely easy to get through it, that 2-step, 3-step, and I have access to 5,000, 10,000, 20,000 rupees, which I might need immediately at this point in time. So there's some of the examples, and I mean, I've only spoken about probably 10% of the examples. There are many, many more that we can look at.
I'm just going to talk about like a few things real quick.
Yeah.
So one of the key things that we've sort of seen, some of the key things that have been mentioned by Manami, but there's also what you call like post registration, which you probably have seen before, where you're buying a particular product. I mean, we talked about embedded finance, and then you see yourself signing up for something completely different. So that's a big story in Nigeria currently, where a couple of years ago, people signed up for a particular product that was just at the point in time was more like a ride hailing, or it's like a super app, or you morphed into a super app. So recently, people found out that a bank account has also been opened for them. When at the time we were signing up for the app a couple of years ago, it was just a ride hailing. They weren't thinking about that. So you also see things around deceptive information, where you see tricky questions being asked. So if you don't read with details, you're not sure if saying yes or no is the positive thing or the negative thing, but then it's whipped up in such a way that you're just confused. And then there's also what we call color scheme, which is very popular. You see the yes button is so bright to no button. It's not so bright or so hidden, or sometimes even so embedded in the color of the text that you don't even see the no being there. So, and these are like things we see every time we use these different products, from digital lending to typical other even financial products. So these are like some relatable examples that I can see. But then the challenge with some of these things is that even with digital lending, for example, regulators are taking different models. So one key thing they've done, for example, in Nigeria, is to work with the gatekeepers, the Apple Store, the Play Store, and then also work with financial institutions, making sure money don't go through financial systems. But what you found was an emergence of a third-party app store, where people just share links of APK apps embedded with all of this risk, and people are desperate, they go to ask. So now they don't have to deal with the gatekeepers, because we can host our app somewhere else, and then people who are in so much desperate need will come to us at the end of the day. So this problem really abound. There's a big space for, we talk about education, we talk about even educating the regulators to understand what they want to regulate themselves. And then they begin to then understand the size of the problem they have to confound, and also how then to best regulate this problem. I'm not a big fan of writing regulations for every new problem because it's sometimes pointless. But then there are existing laws that we have that we can just expand on their provision. I mean, every typical consumer protection authority has the power to do things around misrepresentation, fraudulence, and stuff like that. So why not just build on this existing power and then use that? And we can start talking about even things like a clearinghouse model, the Consumer Protection Authority on one hand. It will also be a competition law issue. It could be a data protection issue, and everybody's working in sync. So I just really wanted to mention that. So one more thing I would really like to talk about is how, when we cross, again, the gate is really deceptive design. And once we scale across that fence, it opens up to a whole lot of things. So from how it erodes our autonomy in decision-making process, we literally not in control of anything anymore. Another problem is also how, we talk a lot about financial inclusion, but then when we trap people in debt cycles, that's no longer inclusion. It's like the opposite completely. It's the opposite of what we're trying to do with financial inclusion, because then people are then agitated, people are desperate at the same time too. And then they are left to themselves, basically without any recourse or any, we've had how this thing go from just shaming to how people have gone into commit suicide, and it's a whole lot of chaos out there. Last two things is about also how quality of products are being misrepresented, where someone say, for example, they post fake reviews. So that's a whole business called positive review as a service. You just hire a bunch of people to post positive reviews about your products, because some of us want to buy something, you download an app, you really want to see what people are saying about it. And then there are just a bunch of clients who have written really nice review about this particular product. And sometimes if you look so closely, you see how so disconnected the reviews are. For example, someone will talk about a product in India, but they're citing a law that doesn't even exist in India. Or it's citing a currency that it's not being used locally in India. So I'll try and keep quiet at this point to allow other people chime in. But then it's just to amplify the size of the problem that confronts us. And now we need to, more than ever, have that sense of awareness, have that sense of urgency in addressing these problems.
So, a question for all the panelists, and I think it's come up in the chat as well, which is, is there an incentive for businesses to be ethical here? Is there a business value case that we can build? And is there a role for investors that then invest in these businesses?
I can take the second question if that's okay, around the investor part. So does investor really play a role in ultimately curbing deceptive design? So let's be clear about one thing, that investors primarily hold any fiduciary responsibility only towards their shareholders, right? So any impact on the ultimate business due to these deceptive patterns leading to potential damage to the business, or the risk of regulatory intervention, will naturally be viewed within an investor's consideration. So while making the investment, as well as during the portfolio support and involvement, they will look into it. However, any liability for the business is actually something that's that the investor might want to avoid, but it's also beyond their capacity. So beyond that, the investor can suggest some ethical directions for an investee company, but they can ultimately can't, micromanage or force or impose a course of action, which can, almost feel like they're taking over the founder's right or the company's CXO rights. So ultimately, long story short, is ultimately there is regulatory teeth, which says that there are certain ethical guidelines and practices that we prefer you to follow, and start off with voluntary basis. Kind of, we appreciate that you follow these kind of guidelines instead of kind of imposing them, because that really curbs down innovation drastically, and that's a very fine balance we have to maintain. Investors may not be able to do much without it. They may not be able to tell their investing companies that this is something you can't do because the regulator will come at you. So that's where the power of the investor kind of falls short, or that's not something they can step into.
Yeah, and I think the question against kind of what is more effective, regulation or self-policing, is a hard one, because I think you have to have both. Like, you have to offer up guidelines, and you have to ask people to be ethical and treat people fairly. And that's why those kind of broad regulations help, because you're not putting it into a particular box. You're just saying to you, ask yourself, are you treating customers fairly? Are you being ethical? Are these practices ethical? And I think on the self-policing, you know, a lot needs to come from the people that are building these as well. So it's not just you need UX, you need very good UX and UI designers. Is there a part for them to play to say, do you know what, I'm not going to build this? Like, I don't want to work for an organization that makes me build these awful, you know, deceptive platforms. And the only way you can do that is kind of appeal to people's best nature. You know, what are you really doing here? Do you know the harm you're causing? And it goes back to that kind of education of all parts of the ecosystem to understand, you know, the part that they're playing in deceptive practices and the harm that it's causing. You know, we just mentioned the deceptive design where people were sharing their contacts, and that's actually hit mainstream news in the UK this week. It's a story from India where people, you know, talking about people taking their lives. And for me, I was so glad to see it highlighted. You know, terrible, and I read it again and felt, you know, sick to the stomach to read it again. But for that to hit mainstream news and to people to actually understand the harms, at some point you would hope that people's kind of moral conscience will kick in, and it won't have to just be the regulators kind of beating people with a stick, but actually that kind of we should actually be employing more ethical design.
If I can quickly jump in here, Jayshree, I think, first of all, I want to break this myth where we think that deceptive design are bad for consumers, but they're good for business. Because, and I think the reason that that myth exists is because we have very few long-term studies which in fact show what is the correlation between deceptive design and let's say a service or a platform using it. And interestingly, that study was conducted in Australia by the CPRC, and they found that that there are in fact costs to businesses who use deceptive design. So 1 in 3 Australians stopped using a particular website or app where they felt that a deceptive design was deployed, and they were harmed because of it. And 1 in 6 reported that their trust in the organization was severely undermined. And 1 on 4, which I think is a very promising number, thought negatively about the organization to which that app or service belonged. So what I'm saying is, in the short run, it may seem very great for businesses to deploy these to increase signups, etc. But in the long run, I think the overall trust deficit that it creates in the digital economy is bad for anyone whose business is essentially resting on this digital ecosystem. So second of all, and I think other panelists have also talked about this, is that regulation is coming. This is not a question of us waiting for it to happen. It's pretty much like privacy. And I think there's a huge, deep connection between privacy and deceptive design, wherein for privacy to be actually real and effective in the digital world, deceptive design needs to go. Because a lot of what we are seeing is in fact deception hindering that right to privacy. And similarly, as regulators pick this issue in different ways, we're probably going to see things turn around the corner.
No, and with that, I'd like to thank this panel. Thank you so much and hopefully, this is an area that we'll all continue working on over the next year. So this time next year, we'll have more to say on this topic.